Hi, this is Zach here with a weekend edition of the Bulletin Board Heroes here at Zach's Traders Cafe. It is Sunday, the 2nd of February. Starting off with the FTSE 100, which has approached the top of that rising black trend channel there from the autumn of 2023. 87.20 was the target we were looking for. We hit 86.92 on Friday at the best, and so it's not a bad effort there. The only problem is that with the tariff issues over the weekend, we might have to brace ourselves for a move down to the initial January resistance there at 8600. Below that, the risk of a move down towards the 8470 area, which was the May resistance. But end of day close through 8720, it could still happen. It could take us up to 9,000 as soon as the end of next month, the end of this month rather, the end of February. Moving along to the DAX, and here it's been a case of up and away, but rising trend channel, steeper rising trend channel there from back in October, the top of that channel heading through 22,000 once again because of the tariff situation, the uncertainty there. We might be due a pullback back to the top of the old rising trend channel there, 21,300. But the maximum on offer at the moment looks to be 22,100, hopefully by the end of this month, up with a bit of jiggery-pokery in between. Moving on to the Dow, and here the situation was that the tariff news or the tariff fears came through towards the end of the session. That suggests that we've got a bit of a wall of resistance, double top there at 45,000, and below that there's the risk of a rug pull down towards the 50-day line, 43,700. So we are in position there, or at least on alert there. The market open at the high, close near the low, so that is a key reversal down and not a good look in terms of the Dow. Normally that kind of setup gives us at least one day on the downside as follow through. In this case, it might be towards 44,000. Moving on to Bitcoin, which for some strange reason may have been affected by the tariff thing as well. Here you can see that we failed above 105 and coming back towards the 50-day line there at 99,000. Below that, we have a risk of a move down to the uptrend line from November at 94,000 now, but hoping that we will stay above, or at least dips towards the 50-day line will be the lowest we will get on this market. Moving on to gold, which has had a great start to the week, slightly fell at the end of last week, but rising trend channel there, 29.75, the target maybe as soon as the end of this month, while we remain above the old October record at 2,800. Below that, 27.50, the obvious place for this market, but still targeting the best levels at the moment. Moving on to the stocks, and starting off with Angle, and here you can see that we're doing well in terms of our progress within this broadening triangle from back in April. Top of the triangle there at 20p. That's our near-term target for maybe the first half of February, while we're above the old resistance there around 13.5 pence, above 13.5, looking for 20. Active Energy is next, and I've covered this quite a few times, largely because it's amazing that it's managed to recover after having such a horrible-looking chart on the left-hand side there. But above the recent support there, 0.18, we were looking for 0.35 or 0.36, and above 0.36, we're now looking for the resistance on the way down there at 0.5 pence, hopefully by the end of this month. On to Allergy, which has done rather well in the recent past as well. It's good to see some biotechs, or at least some of the biotechs, recovering, because that's probably the most difficult area of the market, especially on the London market, which hates anything which seems to be a bit risky. Here we've got June resistance there at 6 pence, above that and above the 50-day line at 6.4. Looking for our target line again, the top of that rising trend channel from November 2023 at 8 pence, above 8, looking for up to 11 by the end of next month. But the key here is holding on to that 50-day line there at 6.5 pence. On to Artemis, which seems to be livening up a bit, and here we've got a rising trend channel base, and bounced off the floor of the gap up that we had at the beginning of the month, so that's a positive, 0.4 pence above 0.4. Looking for the shares, I suppose, to fill the first gap down there at 0.53, hopefully by the end of this month. Big picture target there maybe by the end of next month up to 0.8, but let's say at the moment that seems a little bit optimistic. Moving on to BSF, and here you can see that the stock is trying to regroup, and the reason for the relative positive vibe here is that we bounced basically just below the top of the gap there, and decent end of week close, opening at the low, closing the high, suggests something might be going on there. And 4 pence, the initial target there at the 200-day moving average, while we're above the 50-day line at 2.6 pence. Best case up to 5.25 pence by the end of next month, at the top of that broadening triangle from back in June. Couldn't resist looking at Dialight because of the current setup that we got here. It is our favorite setup, which is the Bear Trap Island reversal. So gapping down to a new low and then gapping up as a turnaround. And the current situation is that we're just near resistance around the £1.20 level. Above that, looking for a relatively easy £1.48, perhaps as soon as the end of this month. You can see a lot of blue candles there over the recent past, and the red candles are rather inconspicuous over the past 2 weeks or so, but at least last week, a great week in terms of the candles there. Moving along to a stock which I've looked at a few days ago, eEnergy, and still looking decent as well. It's actually, I suppose, not far off being in fact, it is a Bear Trap Island reversal, so we gapped down back in October and then gapped up at the end of last week. Current situation is that above the recent neckline resistance at 5 pence, looking for the shares to head up to as high as 7 pence by the end of this month. A stock which is always controversial and divides opinion is Eurasia, but looks as though the Trump effect may be helping this in terms of maybe the situation in Ukraine, etc., etc. But we've had a rebound off recent support around 2.4 pence. Above that, our initial target has been 3.25 pence. Best case scenario now would be the top of that rising trend channel from back in the November 2023, as high as 4.5 pence. Perhaps by the end of next month. Uptrend line in the RSI window helping the cause there too. Another stock which has been previously beaten up and battered has been Mast Energy, but it looks as though this is also recovering in the sense that we are bouncing at the top of the gap there at 0.18. Above that, looking for 0.3 pence by the end of next month or even sooner. Double RSI rebound there at neutral 50. That tends to be a leading indicator on the upside. And for Friday's price action, we opened at the low, closed at the high. So somebody obviously keen on the stock, even though it was the end of the week. On to Mosman, which seems to have many fans at the moment, or at least one or two. Here we have managed to get an end of week close above the rising 200-day moving average at just under 0.04. And above that, looking for the shares to at least head up to 0.55 initially, top of the range 0.08, hopefully by the end of next month, given the sharp bear trap rebound that we've had over the past week. On to Pantheon, which is a drill baby drill play, and here you can see we bounced above the top of the gap there at 42.5 pence, so rather higher at 44, and looking for this to head up to the third or fourth target there, up to as high as 55 pence by the end of this month. That should be relatively easy, and we could update that again as well. Got a soft spot for Raspberry Pi, largely because of the way the shares rocketed at the beginning of December. Also gives the feeling that somebody's stake building in there and is continuing to do so, maybe might take over the company, etc., etc. Here we've got a rising trend channel from the end of October, top of the channel there, heading as high as £9.20, which we're looking for as soon as the end of this month, while we remain above the old December peak there at 7.20. In fact, Friday's low 7.25.5. So things looking pretty strong there, over and above that very strong candle that we had on Thursday. Moving on to a stock which I couldn't pronounce the last time I mentioned it, TheraCryf or TheraCryf. Here you can see that we've hit our initial target there, a penny above that. We've been looking for 1.5 pence, which hopefully we'll get by the end of this month. Helped along, by the way, that the 50 and 200-day lines are both rising. We're in the run-up to a golden cross, and that tends to be the strongest part of the cycle. On to the last two, which I tend to look at together. First one is Valereum, which has been a massive charting win there. We were looking at this as a potential winner, with the shares closing above the rising 200-day line back in September. It's been up all the way practically, and the current situation is at above 26 pence. Recent support looking for as high as 35 pence by the end of this month. Finishing off with Vinanz, a recent mover onto the main market, which is pretty impressive given how retro the stock exchange can be in terms of its views and everything else. But we bounced above the top of the gap there from the early part of this month at 16.5 pence, and looking for at least 23 pence by the end of this month. Best case scenario is up to 30 pence plus by the end of next month, while we remain above the 16 pence level and the 50-day moving average. That's it for me today. More updates during the week.